Let's talk about 11X, the startup backed by Andreessen Horowitz.
Okay.
TechCrunch put out a story about this. In this case, one of the things that they covered was the misuse of customer logos, essentially. 11X, according to Zoom Info, kept using their logo for at least 4 months on their site, on its AI dialer and sales calls, and they spent 4 months demanding they stop, they said, and they're threatening legal action over this.
Wow. It's hard for me to believe that for 4 months, somebody from Zoom was angrily emailing any member of the team at 11X, and that person didn't communicate to the website team, hey, pull this logo. Like, that to me is not a satisfying explanation on any level.
This Week in Startups is brought to you by OpenPhone. Streamline and scale your customer communications with OpenPhone. Get 20% off your first 6 months at openphone.com/twist. LinkedIn ads. To redeem a $100 LinkedIn ad credit and launch your first campaign, go to linkedin.com/thisweekinstartups. And Brex, the financial stack founders can bank on. Unlike traditional business banking solutions, Brex has no minimums and no transaction fees, and you get 20 times the standard FDIC protection. Get the business account trusted by 1 in 3 startups at brex.com/banking-solutions.
All right, everybody, welcome back to This Week in Startups. He's Lon Harris. He's Alex Wilhelm. We're going to do This Week in Tech, I heard, in 2 weeks, Alex, together. I was talking to Leo Laporte. You and I added you to my calendar invite, just so you know. We're both going to do it on, I think it's April 6th. We're doing it on a Sunday. So you and I will be making, we'll be bringing Twist to Twit.
to Twit, yeah. We're just going to drop the S and show up. That's going to be hilarious.
Hilarious. Now, we should get Molly Wood to show up. We'd be great. This Week in Tech by Leo Laporte. He was the godfather of podcasting, along with Dave Weiner and, of course, Adam Curry.
He tried to hire me away in the early This Week in Startups area. Remember that?
Oh, I didn't know that. That's great.
He tried to poach me.
I didn't know that story.
I didn't want to move to Petaluma, so I turned him down. But
Petaluma, having been there a bunch of times for Twit, lovely. Not my scene,
but knock on Napa.
Yeah,
Valley.
but it's just you're an LA guy. You're an LA guy.
I didn't want to go. I didn't want to go.
Too small town for the cosmopolitan Lon Harris.
Exactly.
Anyway, long story short. April 6th, tune in. Twist on Twit. Drop the S, and Alex and I will be there talking shop with our guy, Leo Laporte, who, really did inspire a lot of us. He was a radio guy who then started doing tech TV and G4 TV. Kevin Rose got inspired. That's where Dig came from. I got inspired. That's where Twist came from. A lot of people inspired by Leo Laporte, who was just the radio guy who figured out how to do live streaming. And he has done so many episodes of Twit every Sunday. I think he does it at 2 p.m. Pacific time. And it's just a great roundup show. Wanted to thank the team for painting my shelf. As you can see, guys, I have a new set. Beautiful blue. Beautiful blue. And we're going to be suiting up here. We're going to be taking the job seriously because we want to make clips that look extraordinary. And let's face it, like our clips look okay. And the clip team's doing great, but we really want to be tight. 4K all the way, all day, and beautiful. And you know how I got these colors, Lon? Ask me how I picked the colors.
How did you pick out those beautiful colors here?
Thank you, Lon. Look at those empty bookshelves. It's coming to Austin. It's going to be on this road trip.
It's all in boxes. There, I got the whole thing.
All in boxes. Great. So over the Christmas holiday, I was in New York. I had Thanksgiving holiday. I had this little, holiday in New York, seeing my family. Had my 3 daughters with me. I'm a girl dad, like Kobe. And they were going to do this color analysis. So there's a color analysis that Korean people use. You can look it up online. And they have a storefront, or they have an office in like Midtown Manhattan. And we went to do a color analysis. Turns out my colors are these blues. And so I'm leaning into my blues and my greens. And my wife and the team here just spent weeks and weeks dialing in this beautiful blue. And I'm getting the lighting right. I'm just taking total ownership of set design for myself. But I got the color analysis done, and my daughters got it done. It's really interesting. They put these little swatches on you, and then they move them back and forth. And the guy from CNN, yeah, there it is. So this is like a color analysis. So I did what you're seeing here, where you sit there, and they do this color analysis where they put these different colors in front of you. Lon, red's not your color.
No,
not your friend.
Really? It's not? My
No.
mom, the last time I wore this shirt on this show, my mom wrote me and was like, that shirt looks great on you.
No. What it is red is not good on anybody, almost anybody, because it creates too much flushness in your face and everything. But this, what do you have on there? You have black, or is that like a gray,
like
Alex?
A navy blue?
Navy blue?
This is a blue-green athletic shirt that I like because it breathes.
Beautiful. It looks good on you.
Thank you.
That color might be working there. The red maybe creates too much vibration. Anyway, putting all this aside, it's a very cool thing, and it actually works. And so shout out to them. And yeah, you can go get your color analysis. There's like a bunch of people who do this. Anyway, that's how I got the blue colors here. A little announcement for this week in startups. When we do it live, Monday, Wednesday, Friday, 12 p.m. Texas time, 10 a.m. left coast time, 1 p.m. right coast time. I got it right? Okay. I made a decision. I was talking to Leo Laporte about politics. And it's like ruining every conversation about tech and startups, right? It finds a way to inject itself, right? Like we're all sitting here and we want to jump on the Signal story, I bet, because that's the crazy story of the week. And there's a tech angle. There's a tech angle, obviously. Here's my announcement. We're going to focus on founders, startups, how to build your startup, how to build your team, how to work on your product, and how to really absolutely adore and study your customers. We're going to talk about big tech, obviously, because that affects little tech, right? And then we're going to talk about technology. But I'm going to backload. We're going to do OT, Twist OT. I just came up with that right now. That's the overtime. Where we will just go YOLO at the end of the show about political topics, about all this other nonsense, pop culture, etc. So if you listen live, you'll get OT. But if you get the podcast, we're not going to keep inserting this stuff into there because it's maddening. We can't talk about tariffs every week when we've got so much other great content. So let's get right to the great content. If you want to do the overtime, go to YouTube, search for This Week in Startups, go to X, follow TWI Startups. We're also streaming on TikTok and Instagram. So there's right now between 0 and 3 people on each of those platforms. Please go search for us and follow us. Any thoughts on Twist Overtime? And
my one
concept,
thought is I feel like even though the money angle, we're not like desperate for the cash like a lot of other creators.
No.
There is like, this would be perfect for like a Patreon, or like you could have those YouTube subscriptions where people kick in like an extra $1 or $2 a month to like subscribe.
Okay.
And then it's like, if you subscribe, then you'll get the extra 20 minute.
Like Ben
Too Hot
Shapiro
for
does
Twist.
this, right?
Exactly. Or like Caleb Hammer, that financial audit channel. I like, he does the post show, but you got to be a member, $5 a month. And then you get to see the post show.
Yeah.
And that's where they delve into all the tea, all the like.
Interesting. All right. So
the
2 ideas there. We got
angle.
Twist Overtime. We got Twist Overtime Pro. What do you think, Alex?
I think it's a really good idea. And in fact, when you said, I bet you guys want to talk about the Signal story, I looked at the docket. And what's interesting is that we don't have it in there, Jason, because I felt like, I don't know if we could add much that would actually move the ball forward, because I think every angle in that story, it being such a bombshell that light's been shot at it from every possible side. We could go over some stuff, but I don't know if we could really move the ball forward for founders. So I like it. I want to ask a question though. So I always try to find something that we can all kind of laugh about to start the show.
Sure,
and
I love a little laughing. Yes, please.
Yeah. And so
means.
when GameStop announced that they're going to become a Bitcoin treasury company, I found that to be intrinsically hilarious. And so I stuck it in the intro section.
Perfect.
Is that too far away from the founder
I think
focus?
that this is an interesting commentary because, founders aspire to be public companies and founders fail and they have to pivot. So I do have a take on this. For those of you who don't know, Michael Saylor, friend of the pod, we've invited him on a million times. He hasn't come on. He begged to come on. And then when I invited him on, he unfollowed me.
Do we reach out again? I haven't reached out to him recently.
I'll keep reaching out to him. I would love to talk to him. I don't have a personal problem with Michael Saylor. I think he's doing the most audacious betting strategy I've ever seen in public markets. I don't know why more people are not talking about it. It is audacious and insane and brilliant, depending on if Bitcoin hits, let's call it $500,000.
Sure.
If Bitcoin never hits $500,000 or it crashes, he'll either be a modest success or it'll be a complete disaster and everybody will say, who didn't see this coming, right? So it's got basically 3 possible outcomes. if Bitcoin goes down to $30,000 a coin again, and he gets liquidated or some craziness happens and the stock collapses and it trades at 80% of the 500,000 Bitcoins he owns, people are going to go, well, we all saw that coming, didn't we? He's speeding into the turn. Of course he flipped the car. Founders, every time you miss a call, you're losing an opportunity. And we all know, customers are busy. And if you don't pick up, somebody else will. They're going to move on to the next product or service that is not yours. So with OpenPhone, you're never going to miss another call, and you're not going to lose track of who followed up with you. It's the #1 business phone system. It's the one I use at my companies because it's built for entrepreneurs. $15 a month. What a deal for OpenPhone. You get a dedicated business line, and that lets you keep your business and your personal life separate. Plus, you get AI-powered call transcripts and summaries, so you never forget something in the call that you needed to follow up on. Maybe there's action items. Maybe your customer wants you to follow up with pricing or a feature set. You're going to know exactly what was discussed and what to do next. Also, you can set up automated messages to ensure no customer is left hanging, and OpenPhone works through an app on your existing smartphone or computer. And this makes it easy to manage your calls from anywhere, whether you're on a desktop, you're on vacation, you're a remote worker, you're on your phone, you're in the car, you're at an airport. It's just easy to manage. So here's your call to action. OpenPhone loves This Week in Startups. OpenPhone loves startups. They love founders so much that they're offering 20% off your first 6 months when you go to openphone.com/twist. That's openphone.com/twist for 20% off for your first 6 months. What a deal. And if you have an existing phone number with another service, OpenPhone will port those over at no extra charge. Thanks again to our friends at openphone.com/twist for supporting independent media like This Week in Startups. If it hits 100, 200, 300, 400,000, he's going to look like, wow, that was a really good trade.
Yes.
He figured out how to triple people's money in a time period where it doubled, right? And he basically has to double from here to hit break even because he's trading at 2 times, I believe. The valuation is roughly 2 times.
Roughly, yeah.
So if it was 2 times, he has to hit like, I don't know, Bitcoin has to hit like $150,000 for him to have the valuation of Mr. MSTR is his stock symbol, for him to be like at 1-to-1. The value of the company equals the value of the Bitcoin, something like that. Ballpark. And there's a bunch of websites that show you the net asset value, NAV, to the valuation. So what is it now? It's 1 point.
I was trying to find it for you, Jason, but I ended up on this chart here, and I'm not entirely sure where I'm supposed to look. So if you've seen this, and
this is
net
asset value, right? So he has 500,000 coins, and at 500,000 coins, at 80,000, right? 5 times 8 is 4. So we know it's got to be something like the value of the company is 40. The value of his Bitcoin is 40 billion, correct?
Yes.
The value of his company, if you were to look at a stock ticker right now, might be 80 billion. I'm taking a guess right now. I don't follow it day to day.
You're so close to nailing this without even having the numbers, Jason. I found the data point in the chart that I showed for a second. And according to MSTR-tracker.com, the finest of all resources, the NAV premium or NAV premium is 1.93x today.
Okay, fine. So he's trading roughly at double the value of the coins. It's $80 billion company, $40 billion. I think because it's in a publicly traded company and you don't control the Bitcoin, he should be trading at 0.8. If you believe he's trading at 0.8, the value of the company is like 35 billion or something in that range. So I believe he's doubled the value on the public stated stock. So essentially, if Bitcoin was worth 160,000 a coin, I think the valuation makes sense. Let's put it all aside for a second. The company, Mr., which is short for, they call it
MicroStrategy, right?
It's short for MicroStrategy. MicroStrategy existed for, I think, 25 years as a public company.
It's been a long time.
And as a public company, they had a software product that is now, I would say, I don't want to say failing because it's hundreds of millions in revenue, but it's stepping down. It's deprecating. This happens from time to time, right? You have some big successful thing and it deprecates over time. BlackBerry, whatever it is. So he started buying Bitcoin inside of that company. Now the company has this huge resurgence. Other people are watching this, and he is goading people, encouraging people, or running a Ponzi scheme, depending on how cynical you are.
It's a little, he's pumping. He's pumping hard.
It's definitely a pump.
At a minimum, it's a pump. You can call it a Ponzi at max if you want.
Right. So at a minimum, he's pumping. And then an objective person says he's pumping. A cynical person say it's a Ponzi. I say there's also peer pressure now. So what he's been doing is this peer pressure. And this is where I don't want to say distasteful, but this is where I get red flags, concerns. When you start pumping and peer pressuring people to the extent he is, so he had, just in recent history, he's been telling people, like, how much will you respect GameStop as a Bitcoin maxi? How much Bitcoin do they have to buy for you to respect them? Did you see that survey that he did today? You can throw it up. That's a massive amount of peer pressure. He's trying to goat the CEO of GameStop into buying more and being part of the Bitcoin. Again, you could be a cult, whatever. So he says, what's the minimum amount of Bitcoin GameStop needs to buy to be respected by Bitcoiners? 50 million, just LARPing. 250 million, Mr. Starter Kit. 1 billion, Tesla tier. 3 billion, King Moon. So 47% of people want him to do 3 billion. 30% want him to do 1 billion. Put those two numbers together. You got 77%, 78% of people doing this full court press.
But of course, the people following Michael Saylor and voting on these are Bitcoin people who are desperate for more people to buy in, so their prices go up.
We're not saying this is a poll that is representative of the national view on GameStop's purchases.
The maxi view.
Yeah, this is the maxi view.
I do think the $3 billion number is very interesting because I looked at GameStop's cash holdings at the end of their most recent quarter, around $4.8 billion in cash, Jason. No debt, really. Turns out that at today's prices is 55,000 Bitcoin if they spent all of it.
Okay, which would be 10% of the Bitcoin he owns. And then he personally owns like 20,000 Bitcoins or something in that range, maybe 17,000 or something, which is of course, huge conflict of interest I've explained here before. No matter what happens with MSTR, he will have taken his Bitcoin, which I think he said he owned on average for like 10,000 a coin.
Yeah.
Every $1,000 it goes up, he makes $20 million. Every 10,000, he makes 200 million. Every 100,000, I think he makes 2 billion. So no matter what he does, he's going to personally make essentially hundreds of millions to billions. That is such a conflict of interest that he disclosed it in a tweet and said before he moved MSTR, and I retweeted this tweet. It's like an ancient tweet from the 2020 era, I think. You can find it maybe. I retweeted it. It's basically, he said he informed the board that he owned these before he went on the strategy. That was his CYA, right? If you have a conflict. Now, people are saying it's not a conflict. It actually is a reason to believe that he believes what he's saying. But it's a conflict because, like, say, I don't know, a president or something, if you were owned a certain number of coins and you put them in the treasury, that'd be good for you. Here, some have asked, this is dated
October 28th, 2020.
Yeah, 2020.
Somebody read it and let's see what it says.
Some have asked how much BTC I own. I personally hodl 17,732 Bitcoin, which I bought at $9,882 each on average. I informed MicroStrategy of these holdings before the company decided to buy Bitcoin for itself.
Okay. So, Alex, you know what that is, that tweet.
Yeah, that's him saying,
CYA.
Don't sue me. Yes.
Don't sue me, bruh. I told the board. And he, as if he's not in control of the company, right? He's not in control of the strategy. Pretty clear he controls the company. I don't know the exact governance, but he's the CEO. He's on the board. I don't know how many shares he owns. I don't know if he has super voting shares. Or is he just
the chairman? There's some strange names they have inside of the org. But let's be honest. If you think about MicroStrategy, do you even know the name of the man who runs the software division? No.
No, okay, couldn't tell you anybody.
Yeah. So anyway, executive chairman and co-founder of MicroStrategy.
So who knows what level of control he has over it, but he wants to make sure people know, hey, it is a conflict. He's admitting it's a conflict. And it's a serious enough conflict that I have to inform the board and make sure I get their approval. Because if he didn't, and he did it covertly, that would be like SEC or like the classic SEC. I don't know about this new SEC. Come down on him with a bag of bricks. Pressuring GameStop into it, I think it's a great move for GameStop to put every dollar they have into this. Because GameStop has no business, right?
Yeah. I mean, GameStop's got to do something because it's like going to the mall to buy a physical copy of a video game is just That's done. That model's not coming back. So they need something else to do.
This is the, if you're watching the video, this is the GameStop announcement from their investor relations page. It reads in full, GameStop today announced that its board has unanimously approved an update to its investment policy to add Bitcoin as a treasury reserve asset. So they are going to do this in some capacity, hence the Saylor tweet. Jason, the thing that I'm curious about, just bringing this back to founders, is simply, have you heard of any non-public company putting Bitcoin on their balance sheet? And as a follow-up, if a Launch Accelerator backed company said, Jason, we're going to buy a Bitcoin to have on our balance sheet instead of just cash, what would you say to them?
Hey, founders, I want to share with you an experience I love. It's when I get an ad that is relevant and not some nonsense. Like the other day, I got an ad for a fund management platform, and it was like a new one I'd never heard of. I clicked on the ad because, well, I manage 4 venture capital firms. We scheduled a call with them, and it was amazing. How did this happen? Well, I was on LinkedIn because I like to share links from the podcast, This Week in Startups, right on LinkedIn. In fact, we live stream to LinkedIn 3 days a week, and we get a great audience over there. And I happened to be presented with this fund management platform, and it was a direct hit. Talk about hitting the bullseye. If you're in business and you're making a product or service, it's really hard to find customers in the business-to-business space. And doing B2B advertising is hard, but LinkedIn makes it so easy because, their tools let you target people by job title, industry, company size, and more. So this fund management platform obviously was looking for people in venture capital who had a fund size and a number of people, maybe 10 people, maybe 50 people. And they found me. They got me. They split the arrow. Boom, right on target. And there's 2 things you really need to know about LinkedIn going into 2025. First, they broke 1 billion members, and 130 million of those billion are decision makers, and 10 million of the billion are C-level executives like myself. Where can you get to those people? It's really hard. And the second thing you need to know, LinkedIn makes an impact. B2B marketers report 2 to 5 times higher return on ad spend, or ROAS, return on ad spend. You should know that acronym. Compared to other social platforms, 79% of B2B marketers say LinkedIn is the best platform for paid media. LinkedIn's going to let you build the right relationships. It's going to drive results, and you're going to reach your customers in a super respectful business environment. It's not a place where people are dancing around, saying inappropriate things, or debating politics. Nope. LinkedIn equals business, business equals LinkedIn. Start converting your B2B audience into high-quality leads today. We'll even give you a $100 credit on your next campaign. Go to linkedin.com/thisweekinstartups to claim your credit. That's linkedin.com/thisweekinstartups. Terms and conditions do apply. If it was less than 5% of their holdings, I'd be like, strange, but okay. I do see frequently companies with a large treasury buy treasuries, buy municipal bonds of short duration. So, because you need the money. So if you buy 2-year treasuries, 1 year, whatever, and you can get 3, 4, 5% on $10 million, you get an extra $500,000 into the company. You have to pay tax on that interest typically, unless it's a non-taxable muni bond. I've done that in the past myself. When I did that, I had to go to my board and say, hey, I'm going to put of this $15 million we have, 7.5 of it into bonds we can't touch for, between 1 and 3 years. Or 1 and 2 years, and they're going to roll every quarter off, and every quarter they mature, and we get that money, whatever. And it was nice. We had at some point, maybe it was $50K a month in interest coming in. So it was just nice when it winds up being 5 more, developers for your team that are being paid for by the interest. But the VCs don't give you the money, and investors don't give you the money to be a hedge fund manager. So they're giving it to you to grow a business that goes 100x. That's the problem here. But for GameStop, if they can't come up with a good idea, and the best idea they have is to follow Michael Saylor and the Trump administration down this crazy crypto rabbit hole, which I think is going to blow up inevitably. And when it does blow up, it either can be the total risk of ruin. Look up risk of ruin. When you have a bankroll, you have to be careful to avoid the risk of ruin. That means you don't put all your money on one bet. You need to be able to weather the storm. Risk of ruin is what happens in poker when you take your entire bankroll. If let's say you were a professional poker player with $1 million bankroll and you play in $1 million buying game. People with $1 million bankrolls play in $25,000 buying games, and they limit themselves to 4 buy-ins. So the most they can lose in a single session is 10% of their bankroll. And if you wanted to play $1 million games, you want to have a $10 million bankroll. So you're not putting more than 10% on the line. Anyway, risk of ruin, interesting concept for people to know. But if you were pivoting, you don't have any ideas. And if I was a shareholder in GameStop, let's say I was the co-founder and I own 10%, and I'm watching these folks for years try to get out of the retail game and they don't have a thesis and they can't get out of it, sure, why not?
Let's talk about 11X, the startup backed by Andreessen Horowitz.
Okay.
TechCrunch put out a story about this. Some of the notes included that the company had customers sign 1-year contracts with a 3-month break, and that it may have been misreporting revenue after customers had broken. Essentially, they turned their annual contracts into trials. An employee said that they were kind of massaging the numbers. They may have left some logos on their site too long after they weren't really customers. The company has pushed back, Jason, but I want to start with that and get your feedback.
Okay. So it's all alleged, right?
Yes.
And the allegation
the platform is denying the TechCrunch report. That's important to point out. Yeah.
Okay. So the company they had customers sign a 1-year contract with a 3-month breakup clause. This turned the annual contracts into effectively trials. This is not in and of itself anything problematic. When I do 1-year contracts with people, I'll have a 90-day out. I'll sign a 3-year contract with somebody with a 90-day out, a 30-day out. What it means is I just have to give you notice so we can offboard, and then that company doesn't have, if they had dedicated some resources to it, let's say, an account manager or, a contractor to work on your thing, you just have 90 days to let that person go and to inform them, hey, we're going to just offboard you, whatever. So that in of itself, not a problem. But when you start using the logos of customers and you start using weird terms, contracted ARR, CAR, this is a very abused number. I have been getting, and I have had situations, I'm going to make an amalgamation, where founders told me they had this amount of revenue. And what they meant is the contracted revenue. And then the contracted revenue didn't match the money coming into the bank account. When you're dealing with any type of investor who is, let's call it smart, thoughtful, any of these words you'd like to use, Alex, any smart investor is going to say, what was 2024 revenue? What is 2025 projected revenue? Give me a chart of monthly revenue. I have had people then give me a chart of contracted revenue. And I said, no. Who's your accounting firm? I want the actual accrual-based accounting where you take your 12-month contract. Let's say they paid it in advance. They gave you $100,000 in advance. It's $10,000 a month. They gave them a discount of $28,000. I want to see that $100,000 divided into 12, and I want to see it, put into each month that the service was delivered. And we know that it could get canceled. So if you have churn, which people do, typically 5, 10, 15% churn a year. Some people have negative churn, which because people are adding to their existing contracts. So you have the same number of contracts, Lon, but you go from 10 people to 50 people in your Slack account. So you're paying 5 times as much. So 10% of people, leave the product, but then 50% of the people, 10x their usage of it. You get this, all this, math and fun with numbers. Just fun with numbers is a very dangerous game, because if you're selling shares of a company and you confuse the person buying the shares, then you will get a knock on the door. Hello, SEC here. We would like to talk to you about a special term called securities fraud.
You never want to hear those words, by the way.
You hear
those
that
are
knock?
not good words.
Is that not coming up on the microphone?
Oh, it absolutely is.
Yeah, we can hear the SEC.
Hello. Lon? Alex? Is the SEC here?
Yeah.
Just a scary moment. I remember opening the door and somebody...
Oh, really? You've had the SEC knock on your door for
I've
security?
I've been served.
Wow.
Sir, you've been served. Boom. And I look at this piece of paper. It's got the SEC logo on it when I pull it out of the bag.
That's no good.
Whoa. You want to have like...
Yeah, exactly. Just sit down, breathe.
You have to go in your box of documents stacked in the powder room and start going through them.
No, this isn't Mar-a-Lago.
What is this? What is this? Turns out I had somebody on the pod. They were telling me, we had invested in the company. They were telling me what incredible prospects they had. They didn't have their accounting dialed in perfectly.
Oh.
They ran out of money. It was during a down market. No white knights come to the rescue. The SEC had somebody tip them off that not only the company claimed to be profitable or break even, but then they are out of business because they couldn't make payroll. Well, and then they submitted, Jason's an investor. The person was on the podcast, 30 days before this whole thing blew up.
Oh, wow.
And they said the following things. So the
Evidence.
SEC says, we would like every correspondence. We would like this, I got to hire, I kid you not, an $1,800 an hour attorney. It's the most I've ever paid. You start getting into this level. So now
$30 a minute?
That's wild.
That's 50 cents a second.
When founders ask me what corporate card should they use, I tell them Brex, B-R-E-X. That's what all founders use. And when founders ask me where should they store their cash, well, think of Brex. Why? Because it's specifically built for startups from the ground up. And that's going to help you take your dollars further, and it's going to protect your cash while extending your startup's runway. How do they pull this off? Well, they offer startups the best parts of checking, treasury, FDIC insurance in a single powerhouse account. Knowing everything about your money is non-negotiable. Nearly 40 startups fail because they run out of cash, and 100% of startups can't afford to make financial mistakes. Don't I know this? You know who founders call when they're running out of money or they make a mistake? They call me, and I have to deal with it. If you need the best of the best because you're doing something big with your startup, Brex's banking solution is going to get you 20 times the standard FDIC protection through program banks. Also, they have the ability to send money worldwide at lightning speed. So here's your call to action. Very simple. Brex is used by 1 in every 3 startups in the United States. Let's get that up to 1 in 2. Get the financial stack that founders trust at brex.com/banking-solutions. Once again, brex.com/banking-solutions. Thanks again to our friends at Brex who make a great product that we use every day. I mean, I'm trying to think of when I've lost.
They come into the office, set a briefcase down, take a sip of water. You're already out. Like,
that's a car payment.
You're out $5,000 just for
I
that.
bought this guy a tomahawk steak every 10 seconds.
That's
I was
insanity.
eating Wagyu
That's
for a
insanity.
year. Anyway, happy to pay it.
Shout
out to
better than prison.
they're like, you have no exposure. Don't worry about it. Then I get the $30,000 bill for my no exposure. I paid I buy a Prius to my attorney's son or daughter or their housekeeper got a Prius on
nice.
JCal.
Yeah.
Happy to pay it.
So happy. I'm not grimacing at all here. I'm not in pain. No.
And I'm like, okay, well, did they clear me? And they're like, oh, no, they don't do that. What happens next? What you're seeing here is a shrug. I'm doing a shrug in front of my beautiful blue shelves.
Yeah, it's
just a shrug.
Kafka-esque. It's just like
they don't tell you. They leave you on the hook indefinitely. There could be another knock. Hey, remember we talked to you 10 years ago about the startup? Turns out, we pinched this person. We would like to talk to you again. That's the problem, I think, with how the SEC is run, respectfully, is that they have so much power and they have a very important mission and they're very principled people. But man, they need to be a little more interactive, and like maybe wrap things up so I'm not sitting here sweating bullets.
I don't know. I think they might want an environment where people feel like on edge and scrutinized, like they don't have that many agents working. The way to enforce these rules is to make everybody feel like you could be being watched at any time.
Yeah, well, they did also tell me if I didn't get the paperwork to them in time, I was going to go to El Salvador to stay in a camp. So
that's what you get for your tweets.
I was going to be going to a camp.
I want to go back.
Cheaper.
I want to go back to contracted ARR, Jason, or CARR versus ARR. My understanding of this is that contracted ARR includes future annual recurring revenue that is not yet manifested as cash.
Correct.
So my question is, if I signed up for Jason's SaaS product on a monthly account, say, I haven't paid yet for some of the ARR you might count if you presume that I'm not going to churn if I'm monthly. So to me, the actual distinction between CARR and ARR is a little bit muddy. Can you, in idiot terms, explain it to me? Because I was trying to prep and I couldn't quite.
I think the way most people do it And this is a term that I've only seen the last couple of years people lean into.
Okay.
Any contract signed. I sign a 10-year deal with you for $100,000 a year. I have $1 million in contracted revenue. So now my contracted revenue number, which was $9 million, is now 10. Now, what are the chances you stick around for another 9 years and 11 months? I don't know. What this does is it incentivizes the team of sales executives. I think if you have an incentive, if you show me an incentive, I'll show you a result, right? I'll show you an outcome. This is not the incentive you want. You don't want your team to start playing fun with numbers. There's a pipeline report. The pipeline report is how much is the contract's worth. So now you got salespeople. They have a pipeline report. So there's 100 possible customers I'm in active discussion with now, Lon, and each one of them's worth $1 million. I have $100 million in pipeline. And then there's the people who sign contracts and how much revenue that will generate this year. Okay, great. So now I can look at those two numbers. 100 million in contracts. You signed one of them in the first quarter. You signed one each quarter. You signed 4 of the 100. So we know that 100 million in pipeline results in 4% on average in closing. So now we judge you. You have a 4% close rate. So either those 100 million in the pipeline, you didn't actually qualify. Qualify means they can afford the product. It would be like me saying, a bunch of people come on the lot and they look at the Corvette and they all want to test drive it and they all look at it and say they're interested in it, and I convert 4% of them. Maybe the people that were there not for a Chevy Corvette, they were there for a Chevy, I don't know what the Volt, I don't know what the lowest Chevy is. I'm going to drive a Corvette. Anyway, putting that aside, then you could look at the contracted. So now you start getting into the fun with numbers on the contracted out. You follow me here? Those $4 million contracts are 40 million. So now the sales executive, when they go into their review and they want to get a raise or whatever, I had 100 million in pipeline. It resulted in 40 million. I'm closing 40%. You close 4% of the names. You close 40% of the dollar value per year. But actually, you said you were going to have $1 billion. So you're still at 4%. So people get into weird fun with numbers. And then they start playing games to build the pipeline up or to build the contracted, when in fact, you actually need to know just how much money you're making every month. That's why subscriptions are the truth. The subscription business model, it really does give you a center of gravity as an investor, as a team, as a board. So just look at the monthly, quarterly, and yearly numbers of money into the bank account. I go directly to the accounting firm. So when we're on the board of companies and they're giving all these presentations, say, hey, to somebody on the team, make sure you talk to the accounting firm, once a year, once every 6 months, if you can, if they'll give you the contact info, and just check the numbers.
I'm trying to weigh, Jason, the reporting, which comes from two people, Dominic Maduro-Davis and Marina Timken, who are both very serious people, and they don't report frivolous things, and the company's response. So in this case, one of the things that they covered was the misuse of customer logos, essentially claiming customers that may not have been the right customers to claim. For example, Zoom Info used 11x, and this is a quote from the company. Well, actually, no. They used it for basically, it looks like a month. And then 11x... They trialed it. And then, it was a pilot. There you go. And then the 11x, according to Zoom Info, kept using their logo for at least 4 months on their site, on its AI dialer and sales calls. And they spent 4 months demanding they stop, they said. And they're threatening legal action over this.
Wow.
And then the company's response, 11x said, just to be fair here, 11x said, we have never claimed customers we did not have. The customers named in the article paid for and used our product for a period and then churned. We regret not having better processes to remove logos from our website more promptly. But they said that they told them over a multi-month period to stop doing this. We spent the last 4 months demanding they stop displaying our logo and falsely counting us as a customer, the spokesperson said. So to me, even if you're willing to go, the CARR stuff is just accounting nuance and maybe it's a little more aggressive, but it's kind of inside the normal realm of normalcy. To me, that shows either incredibly poor internal organization or too much rule bending for my tastes.
The appearance of impropriety is impropriety. I keep saying this. on a range of subjects to people. Just if it appears to be inappropriate, it is. Just take that philosophy in life, right?
I have to say, it is hard, as an outsider who knows nothing about these companies and has not been part of any of these interactions, it's hard for me to believe that for 4 months, somebody from Zoom was angrily emailing any member of the team at 11X, and that person didn't communicate to the website team, hey, pull this logo. Like, that to me is not a satisfying explanation on any level. Obviously, they're in a Slack room. Somebody sent that message. It was deliberate. It wasn't just like, oh, we don't have a good process to update our website.
If you can take the time to put the logo up, you can take the time to take it down.
That same person could take it down, exactly.
So they had the procedure to put it up, but they didn't have the procedure to take it down.
Doesn't make sense to me.
Doesn't make much sense, right?
Then
there's Airtable, which they also had on their site for a while. Airtable told TechCrunch it wasn't a customer and never gave 11X permission to use its logo. Airtable conducted a, quote, very short trial of the product, and yet as of March 21, 11X was still claiming Airtable as a customer on its website. So to me, it's hard to say that all the accounting stuff should be obviated as a concern here because there seems to be a pattern of, I would say, lax management. So I guess what I'll just say is this. Everyone's going to give early stage startups a little bit of breathing room to be bullish, to be enthusiastic, to go fast, to try stuff. Shout out people who are building stuff from the ground up. But if your last round was 50 million, I think Andreessen led it, you're no longer a scrappy startup with 1 or 2 people. You need to behave like a real company because you're almost a scale up at that point.
I mean, just the fact that we've spent 15 minutes of it on This Week in Startups and TechCrunch wrote an article, like, is it really worth it to keep the logo up for whatever number of months and then just create the appearance of impropriety? The founder, whoever the CEO is, has to be fired. I mean, just accountability wise, we live in an age where there is no accountability. I do think like there is something to be said for just owning your mistakes. Please just own your mistakes, folks, man. It's just, we made a mistake. We'll do better. I just want somebody to, will somebody say that? Anybody on any topic, just say, you know what? Could have done better. I say it all the time. Could have done better. I would change my behavior there. I would refine how I said something. You know, I'm always like trying to just be a little bit better. Anyway, let's keep going here.
All right, Jason, you want to talk about Chinese AI. There was a great piece in Bloomberg digging into a diffusion of AI technology across China in the wake of DeepSeek, and also a deluge of releases from leading Chinese companies in the tech space. I had been keeping tabs on this, but I hadn't actually quite noticed how many big things had dropped. So just to give people a little taste, in the last couple of weeks, Alibaba dropped QWQ32B. This was a new 32 billion parameter reasoning model that was quite good and cheap. Also, Ernie X1 and Ernie 4.5 dropped from, I think it was Baidu. That was a new reasoning model and a new foundation model. And then Alibaba's former subsidiary Ant, I'm not quite sure how the corporate ownership there works today. They came out with a cool new way to train models more inexpensively and also to use a mix of homegrown and NVIDIA chips to do so. So the AI market in China is cooking.
Yeah, the way I would, position this is in the same week, we have Grok dropping stuff. I think ChatGPT dropped some image stuff that's going viral today.
They baked in basically like a DALL-E type image generator into the main ChatGPT, so you can request images right from the main interface.
They're doing them in this
example.
Oh, okay, go ahead.
I have an example of Jason and I, so I'll bring it up.
Oh, hey, look at that.
So I uploaded a picture, a still from Twist, to test this out. And you guys are the film guys. Studio
Ghibli,
thank you.
It's Miyazaki. They did Princess Mononoke, Spirited Away.
Right, okay, question. Are they paying Studio Ghibli for the rights to this opportunity?
I'm sure they are not.
I'm sure they are not.
I don't know. I mean, this is such a copy. This is, if it's Studio Ghibli's iconic style, I assumed that they're making money from it. That was my assumption.
That is, I don't think there's a lot of basis for that assumption. I don't think I've heard about a licensing deal. And I honestly feel like Miyazaki would have put the kibosh on a licensing deal.
Yes, I think that's absolutely correct.
He's not an AI fan.
I think this is a lawsuit then, and one that they will win, because an iconic style like this that confuses the user. I'm the user here. I know Studio Ghibli. My kids have watched their movies.
Sure.
I know that this is something that people have made money from in the past. There are people who've made like a South Park character generator, and South Park released that themselves. So you can, in fact, copyright an iconic style. You can copyright that.
Well, we're going to find out in the court of law. But I will say, though, that it did do Jason a little bit dirty because it made him look like a grandfather.
It does, yes.
So
it is what it is. It doesn't have to be perfect right now. But I do think they should.
Pretty good. I mean, it's recognizable in that style for sure.
But why wouldn't they pay them for a license and have an exclusive? Why wouldn't you reach out to them and say, hey, we want to do this? It would be a business opportunity. If they, for every time they do this, I think Studio Ghibli should get like a buck or 10 cents. It's like 10 cents.
Would be a lot, yeah.
10 cents.
I think their argument would be, how is this different from an artist watching their movies and then teaching themselves how to draw like that?
Because
like,
an artist doing it is going to not be doing it at scale and not confusing the public. And then this is an opportunity for Studio Ghibli to make money from their IP. So derivative works and IP like this, it should be, the opportunity should be given to the IP holder. So if you made it one that was Disney Princess, then the Disney Princess opportunity should be Disney's. I think we would all agree.
Yeah, of course.
And here to make a Twink Ghibli.
Yeah, so I shared this relatively whimsical tweet from Sam Altman just to point out that he is very aware of the trend. So it's not like this is something that OpenAI is trying to like pretend isn't happening.
I mean, in fact, his avatar on X now.
Yes, now he is Studio Ghibli.
No, I think he paid for it. This is the exact same as using ScarJo's voice. It is literally the exact same. You're taking somebody's IP, like Michael Buffer owns his catchphrase. What is it? Are you ready to rumble or something like that? Let's get ready to rumble.
Let's get ready to rumble.
That's protected IP. Like it's his brand. He owns it. Now I can say, let's get ready to rumble here, describing his thing, or I can make a joke about it on Saturday Night Live. But if I started doing it at the beginning of every NBA game or the beginning of any episode here, I should pay some license to him for that, since he did take the time to trademark it. You can trademark styles. So I think that they paid for this. If they didn't, they should.
Well, we'll find out. I don't see any news about that exact point, but I guarantee Studio Ghibli will be in touch with them.
Let's just talk a little bit about Chinese, the pace at which they're going.
Yes.
There's no reason for an American to use any of these products coming out of China, because there's security concerns and they're not hosted and easy to use. And you have a hosted free version you can use anytime called Gemini or Grok or ChatGPT. So the fact that they're copying stuff at an incredible pace and doing some of their own innovations, let's give them credit for that, it doesn't really matter all that much. It just shows that everybody all at once is making apps, in the previous thing, or everybody all at once is making websites, or everybody all at once is making movies. We should expect that. The question becomes, at some point, with these free options, if they are flooded free, open source with the MIT, whatever
license,
will they then have downward pressure on pricing? So I don't see Americans going and using these things, because who's going to go seek them out or whatever? But I do see them creating downward pressure, because if you're a developer, and I did see a developer saying this in a forum recently, why would I pay this amount for this many tokens from ChatGPT if I could install this on 5 M4 minis, or I could buy 2 NVIDIA cards and run it on a local PC? So this is where you do start to see downward pressure on pricing. I think some of these models will be good enough to do things like, let's say, the Studio Ghibli thing. Mm-hmm. Studio Ghibli would partner with ChatGPT, or their team would pay to use Gemini's, backend, or an AWS or an Azure version of this. But if somebody who's a developer at Studio Ghibli says, I can set this up and stand it up for ourselves on an open source server here, and we can do it for $100,000 instead of giving $1 million a year in licensing fees or whatever to pick your hosted version, and we can save the 900,000. Here we go. And as Derek is saying in our chat room, we do this live 3 days a week for those of you listening to the pod and you're part of the replay gang on the pod. Derek says, hey, age of abundance. And that's what's happening. There is another corollary to this. Type in, if you don't mind, we'll pull up Xiaomi's website, which I think, I don't know where to find it. I think it might be mi.global.
It is.
Okay. Now, Xiaomi makes incredible vacuums, electric toothbrushes, scooters, camping lanterns. Have fun going through their website, right?
Yeah, this is insane.
Like, go to lifestyle for a second. Air compressors, sunglasses,
I'll just
luggage,
do this live.
routers,
Lifestyle.
photo printers, hair clippers, scales, massage guns, anything.
Sunglasses?
This
What is this company?
What Chinese companies do, just like Sony might. If you go to their massage gun page, did you know Xiaomi, who used to make your Android phone, has massage guns? Okay. That's like the Theragun that I use. That's incredible. Shout out to them. Awesome gun. And they just knocked it off. Now, are some people going to buy these in China? Of course. I would like you to, now it's not on their website. I don't know why, but type in Xiaomi SU7 Ultra.
Yeah, I know where we're going with this.
SU7 Ultra. Pull up the Wikipedia page for the SU7. Show people what we're working with here.
I'm going to pull it up now, and you're going to
It's not just camping gear or massage guns, Lon, or smartphones.
Mm-hmm.
The ambition of Chinese companies has been unleashed. And if you go look at this car, this Xiaomi SU7 car, it's a luxury version of the Porsche. I forgot what Porsche named their four-door.
Not the Panamera. Is it the other one?
It is the Panamera.
Okay.
I think you're right. Yeah, it's not the SUV. This is like a four-door sports car. People are losing their mind about Xiaomi's cars. They're making a range of cars now. This is a phone company. Let me say that again. Xiaomi Auto, which is XiaomiEV.com. We pull that up, which people know is spelled XIAOMI.
I'm going to let
EV.com.
Lon pull that up. Will I just point out that the SU7 Ultra we just showed on screen opens at 530,000 RMB, which is about 73,000 USD, which is not that much for a car.
This is a $300,000 car in America. If you were to, buy it, we're getting to like a level of, oh my Lord. I don't know. That's the Ultra. I don't know what the SU7 goes for. These cars are being sold at some de minimis amount of profit, right? And obviously the other main company in this regard is BYD. And
the SU7 starts at 30 grand USD.
There we go.
Okay, thank you. Here we go. This is like next level. This is a phone company 10 years ago is now making cars that will rival Germany, America, and Japan. And these cars are cheaper. I don't know that they're better. They're certainly not safer. But if you're living in Brazil or, in Germany or in Africa or Singapore, maybe this is the right car for you. Maybe this is half the price. And so the copying now is getting faster and better. We had TK Travis from Uber on All In a couple weeks ago, and he was talking he said, I can't overstate how quickly this all occurs. And that was his experience 10 years ago building Uber in China. They can copy so fast and so great that they will create downward pressure, which then, of course, makes more choices for customers, and you're not going to need as much money.
I just want to say, to underscore Jason's point about DeepSeek's really rapid rise in the AI game, to make the point about Xiaomi getting into cars, I put together a timeline just for our notes, but I'm going to share it here because it's pertinent. So I didn't realize that it was only back in last May that DeepSeek dropped V2 of its foundation model family. Then September was 2.5. December was V3. That was the real kind of breakout moment for DeepSeek, I think, in the AI community. Then they dropped R1, their reasoning model, in January. That's the one that blew up globally. In March, they dropped an improved V3, and R2 is supposed to be coming quickly. So inside of 1 year, we could go from DeepSeek V2 to R2. That's insane. And I think it's very bullish, not for the price of AI models, not for the price of AI inference you can charge commercially, but for the impact of AI technology writ large. And if I was a startup that used AI models in my tech, I would be stoked because everything I build is going to get 5% better a month for the next couple of years. And that's just a great technology tailwind to have underpinning your products.
I want to jump to this Israeli VC, Gili Raanan.
I think it's probably Gili. I'll look it up.
It's probably Gili Raanan.
That sounds right.
He, I guess, was an investor in Wiz. He was on Invest Like the Best, a really cool podcast that I've been on from Patrick O'Shaughnessy. And he explains really how unique Wiz was because they were selling into, we talked about sales earlier in the program, how they were selling into 4 different personas and that those 4 personas were actually one. Let's just do 30 seconds from Gili.
When you sell a product, you're going to face 4 personas. The person that has the pain point, that has the problem, the person who has the budget, the person that has the authority, the person that would actually use the product. Now, as a startup, if those 4 personas map into a single person in real life, that's a mega hit.
Okay. So if we were to look at something like, I don't know, HubSpot, right? It's a marketing solution. You might have a marketer on your team who's on the front line, who does email marketing and builds your mailing list and does, marketing online, and they need a CRM. Okay. They have to go to their CMO who has the budget and say, hey, can I buy HubSpot? And they got to do a little justification there. Then the CMO has to either have the authority or they may have to go to the CFO. I'm sorry. Then the person with the budget has to go to a person who is the IT manager who manages SaaS software at the company and say, hey, can we install this solution and put our customers' data in? And like, oh, well, the customer data is already in these 3 different places. So yes, but we've got to build a bridge to do that. And then finally, who's going to actually use this? Well, there might be another person who is in the sales team who has to use HubSpot to send out their mailing to come join a webinar, right? It could be 4 different people have to get involved. Now, what he says here is when you have a mega hit, and I've never heard anybody frame it this way, so that's why I wanted to bring this up. A mega hit in the business, like Wiz, is that the person who has the pain point was this security person, a developer of some type, who also had the budget to buy it because they were the one installing it, point 3, and they were going to use it every day. And that means the product ramped very quickly. We were talking about Wiz on this program and on All In a week or 2 ago and just saying, how did they ramp so fast? You guys can pull up the chart of the revenue or Wiz's revenue over the years. We were stunned when we talked about it here, Alex, of just how quickly Wiz had gotten to 100 million and whatever it had gotten to. This is an incredible insight that I have never seen framed in, my 30 years in the business. That I have heard, of course, you have to get consensus in the sales process and there's multiple people, but I've never heard of like, oh, there's a product that, boom, you can just buy. It is the equivalent in consumer. We see this all the time. You need to get a ride, you download Uber and you buy it. Now, in some cases, a kid might need to get a ride, so they have to get their parents involved and get their credit card to set it up. So there's 2 people involved in the decision. You do see that in consumer sometimes. A kid wants Disney Plus, parent has to sign up for it. Yeah. Maybe there's a technical person in the family who has to put it on the TV. So you have to get 3 people in the family to, one person's good at installing it. But this is a very interesting framing that I'd never seen. And here's the chart of the Wiz revenue. Alex,
this is
tell us that, and then we'll go to
Sakura, and essentially just shows them ramping. I think they did 100 million ARR in 18 months, and then they scaled to, I think it was $500 million, and they're looking to hit $1 billion this year in ARR. And then they were going to go public before Sundar Pichai, CEO of Google, somehow thought it was the right thing to do to remove what would have been the hottest IPO of like the last 10 years and instead bought the company for a paltry $32 billion, ruining my fun and taking away my good newsletter fodder. Thanks, Sundar.
And pull up the fastest to 100 million. It's in the Slack chat room.
Got it.
Another really good image to take a look at. People were really amazed by how quickly Shopify and Slack had, gotten to 100 million in revenue. And then Wiz just straight up. I think there'll be a moment in time where there'll be a consumer product that goes right to 100 million in a day or a month. Right?
Yeah, we're getting closer to that. Yeah.
This is SaaS products. I wonder, like, if somebody were to release a really cool product like Tinder or, I don't know, chess.com all at once as opposed to iterating, and it just caught fire and went viral.
It'll happen. I mean, I think we've seen exponential growth like that all the time. Like, I remember the era when it was like posting a video and will a video get 1 million views in one day? And like now that's it. It get 1 million views in 45 minutes if you play your cards right and you are a K-pop act or something.
Well, let's just go to show how much the bar is changing. I mean, the old, have 1 million ARR, raise a Series A just feels about as archaic as a buggy whip now.
One thing I would add is Gili does say, if you watch that whole clip, that like not every successful company needs like all 4 of those personas to map onto one person. It's just when it does, it's like this magic formula. Like there was one guy.
People talk a lot about ICPs or like ideal customer profiles.
Yes.
And when I was at Crunchbase, we actually had a number of different ICPs at the time that they were kind of going after at a sales perspective. Is it possible to have like too many ICPs in question? Because it feels like in the Wiz example, they discovered that they thought they had 4, but they really had 1, and that was a turbocharging element. So how far down should you boil that?
Yeah. So the concept between the ideal customer profile is that that's one, it's singular.
Okay, got it.
And that there are other customer profiles, of course. So for something like Crunchbase, people didn't know this, but I had built that business like 20 years ago. We called it Venture. There was Venture Source, Venture Wire, and we did Venture Reporter. And we would sell for $500 a year the ability to go into this database and see all of the people who had raised money in the management team. And we did a little interesting thing. We had a V card. V card was this like thing you could click on. It would add it to your address book. So this is 20 years ago. 25 years ago. I did this in 2000. I created this little database, and we had sold like 1,000 people had paid us $500. We had $500,000 in revenue for it. And it would turn out salespeople all wanted this. And what they would do is they would sit there all day, and we told them they could download up to 20 V cards a day for $500. And there were people who bought 4 of these, gave it to 4 different salespeople, and they hit the limit every day, including weekends. And they're like, can we just buy the entire database? We're like, no, we don't want you spamming everybody in here. But people were doing it to get the email addresses. So salespeople for Crunchbase is one of the ways they sell it. If you were to pull up Crunchbase, and they probably have a sales page, or if you just typed in Crunchbase for salespeople or account executives, there's probably a landing page that sells them on it. And it says, hey, you can find people who've just raised money, et cetera. And then there's VCs, and then there's people at corporate development offices. So you work for corporate. Yeah. So finding new prospects.
Yeah. This
there's
is
like
one of this
literally a landing page for this customer.
Yes.
I'm going to guess. Oh yeah, here we go. For prospecting, for investors, for
market research, enriching your own database. And so it's exactly what you said.
So, one of these is the ideal customer profile. And that would be the one that you go after first and you spend most of your time on. And then, of course, you go down the line, right? The ideal customer profile for Uber Black was, and for Uber at the early days, was a CEO or a VC, a finance person, somebody with a 6-figure salary who traveled. That was your ideal customer profile. You get the CEO VC who does 2 trips a month. They need to get picked up at the airport. Those are big ticket items. And they're going to be driven to the airport, driven from the airport in their destination to their hotel, driven from their hotel back to the airport, and from the airport at their home, back to their home. It's 4 rides of $150 each, $600 every month, $7,200 a year, just for that one monthly travel. That doesn't count when they go to dinners and want to have a glass of wine. So that's another 50 of those, so 100 rides there, and those are $50 rides. So that's another, you start to get into like, how much is that CEO worth?
A lot.
Worth a lot. They're spending literally $2,000 a month. They're worth $25,000 a year minimum.
That's a Prius. Sorry.
That's
I think everything now comes in Prius size measurements.
Prius is 30, but yeah, it's close to a Prius. You're right. It's upwards of a Prius. So that's what you're doing with ideal customer profiles.
We should talk about Founder Friday before we get out of here for today. We've got the Founder Friday bracket ready to go. We have 16 companies. So just to give everybody a little bit of background here, we're doing a Founder Friday city-based bracket March Madness competition. We had Founder Friday events happening all over in cities around the globe, not just America.
Okay.
16 of these cities picked a winning startup from their community. Those 16 are now competing in the This Week in Startups.
Look at this
March Pitch Madness bracket. And I've got a little bit of info. I've got the log line for all 16 of these companies.
Wow, look at this. We
interested.
have Houston, Boston, Austin, Quincy, New York, Philadelphia, Zurich
versus Florianopolis, Brazil,
Sydney, Arlington, Chicago, Denver,
Yerevan, Armenia,
Los
Shout
Angeles,
out
San Francisco,
Yerevan.
and Portsmouth. Wow.
And Portsmouth. They're very excited in Portsmouth. I saw a few tweets from them today. They're fired up.
We're going to see each of these pitches for 2 minutes on This Week in Startups, and then I pick the winner.
I've got all the videos. So if you want to watch the pitches on Friday's show, we absolutely can. I also have just like a very quick description of all the companies if you'd rather do it that way.
Well, I think the way to do it is these are 2-minute pitches.
We've got not everyone said we've got 2-minute pitches from, I believe, 14 of the 16.
Nice.
Right, so what we should do is on Friday's show, Monday show, Wednesday show, Friday show, 4 shows. 16, we just have to do 2 brackets a show or something like that to get to the next round. So
sure.
maybe
we could do 2 matchups per show, and that would take us four episodes.
Yeah, so if we do 4 matchups per show, 2 minutes each. 4 times 2 is 8 minutes. 8 minutes of duration. We do it in 15 minutes per show.
Why don't we have Lon and I each assign one of us one of the 2 companies that's going up against each other, and then why don't we also help kind of pitch them, and then Jason can kind of.
But one issue with that is Monday and Wednesday show, I will not be here because I'm driving to.
That's okay. I can do it with Alex.
Yeah. Okay.
Alex,
you
can pick
two.
it up.
I trust you two to do it in my stead.
I mean, we could also try to go faster. We could dedicate a half hour to it and do 8 of them and just boom, get through it Monday, Wednesday, and then have the excitement for Friday or something. So why don't we start Monday?
Okay.
Today's Wednesday, so we'll take Friday off, and then we'll start this Monday next week.
Okay, we have Friday off. What do you mean we have Friday off?
No, I mean, we're doing a show on Friday. We won't do this bit on Friday.
Well, we could start on Friday maybe, and we'll see how much show we have. Let's get started.
And then I'd be around.
Yeah,
I'm
so
here
let's
on
start Friday. We'll just get started immediately. This is great fun. We could do this, twice a year or whatever. Yeah. All these companies are going to get great promotion. Go to founderfridays.tech is our website. What is Founder Fridays? You get 6 founders around a table, no more than 6. I'm locking this in. It has to be 6 going forward. And then you have to start a new pod. So you could have multiple pods, but I want a leader per pod. So let's just make sure we communicate this with Ray, who's managing with us, and whoever, Maddie and Corinne from our team, I think are doing this as well. We want to lock it into 6, always 6. We know that's what works because 6 people can go around the table and talk for 10 minutes about their startup, their wins and their losses, their wins and fails. That's the format of a Founder Friday. You can do it every Friday. You can do it every other Friday, but we're doing first Fridays is what we want you to commit to with 6 founders. You could start with 2. The format is, it has to be this. You go around a table, you talk about your wins and your fails, 1 or 2 minutes for each. Then you have the remaining 7 minutes in your 10-minute allotment for the other 5 people to give you feedback on your wins and your fails. I think the best way to do it is to go around the table, 2 minutes each, wins and fails, wins and fails, wins and fails. Everybody writes down. Then anybody in the 6, you go around the 6 again, they ask people and they give their best advice to the other 5 people. Pick one of them that you can give great advice to. So for example, Lon, let's say you had a startup and you had a fail. Give me a typical fail.
Our runway is down and I didn't let go of any people. So now I'm behind the 8 ball.
Got it. You're running out of runway. Perfect. Let's say you have a fail. Alex, what would your fail be?
I did not properly manage my cybersecurity risk, and I just leaked half my customers' information thanks to a leaky AWS database thing.
Perfect. Okay, so you got a cybersecurity issue, got a runway issue. Now I'm in year 3 as an entrepreneur. I got hacked and I had less runway. I say, after we go around the first 10 minutes, 1.5, 2 minutes each, I say, you know what? I have a cybersecurity expert who helped me. And I hired this crisis PR firm. Here's how we handled it. I'll put you in touch with them. You take out your laptop, You go do the intro right then and there. Boom. You've now taken something that's really hard for Alex. Then Lon says, I don't have a lot of runway. He said, well, how many employees do you have? You have 7. Great. Why don't you put 4 of them onto an hourly basis for 10 hours a week each, starting next week, 2 weeks from now, you give them a little bit of runway and you tell them, hey, I can only keep you for 10 hours a week. Is that okay? If not, I understand. And then you've extended your runway from 2 months now to 7. And now you have the time, you'll hit break even and then you can raise money. I did this. It's hard to do. And you get that encouragement. That's what I'm looking to happen here. If you want to sponsor a pod as a lawyer, accountant, cloud company, you go to the founderfridays.tech site. You pick what city you want. You'll wind up on River. River is our platform we're using to do this. If you have a podcast or a community you want to build, I think somebody's going to, instead of taking a podcast and building a community about it, I think somebody's going to just start by building a community. I think somebody will be like, I want to create a community of vibe coders. And they create a vibe coding community on River. I'm not going to do this. I don't have time, but ours is for founders who have existing companies. So start a Founder Friday chapter. Has to be 6 people, has to be 1 hour. You have to report back. The reward you get is you get to be on the program. So we're going to start having also cities come on the program every 2 weeks and talk about their biggest lessons. So Lon, I think this should be a pre-produced package. They can either come on live or we can just have them do a video where they say, hey, wanted to let you know, these were the 3 biggest challenges we had, and here's how we handled them. And we just play that video for a minute and then we respond to it. Or they can just give it to us in text and we respond to it. Or they can come on the show, have 3 founders come on the show. They explain their problems and how they solved each other's problems. But I want to know the top 1% of the audience. That's the goal of Founder Fridays. More excitement to come.
More excitement to come. I love a bracket. I have my my college women's basketball bracket filled in, so I'll do another one. Lon, thank you for putting this together.
Yeah. And we put a lot of thought into it. This bracket is seeded. Like, we didn't put the numbers on it. We don't want to hurt any feelings, but we really thought out how this is organized to create the best competition.
Let's also put this in the docket at the top of the docket so people can see it. This week in startups.com/docket. You can do the docket along with us. Also, Launch Accelerator's 34th cohort is starting in mid-April, and we're still taking applications. You can apply at launchaccelerator.co. launchaccelerator.co. It's going to be in the notes. How does it work? Just like Y Combinator, Techstars, or any other accelerator, we give you $125K. We work with you for 14 weeks. We introduce you to hundreds of investors. We help you with your pitch. We help you with your growth. We tell you how startups are made. You get exposure to a bunch of speakers, and hopefully you raise money. Of the people who want to raise money, 60, 70, 80% of people who intend to raise money within in the accelerator or within like 6 months of graduating. So we have an incredible hit rate of people being able to raise money because we accept people who are kind of trending that way. 5K a month in revenue, 25K a month in revenue, product in market, product market fit, heavy, light, somewhere between those two. And then we help you grow it. We introduce you to founders. We have something called the Whisper Network, which is a database we created where you as a founder can come in and say, I would like an introduction to this person, or I want to sort the database by investors who invest in consumer products versus SaaS, or SaaS versus consumer, or marketplaces. You click who you want an intro to, and we automatically send those, and we track how we're doing that. I was inspired by Alexis Ohanian, who created Cerebro, where he tracks all the work he does for his startups. Now, we don't track every tweet we do, whatever, but we're just tracking how many intros we can do for you. We probably do on average for each of these accelerator companies 100 or 200 intros. These are warm intros. They turn into meetings often, and then sometimes meetings, if you've got a compelling product, will turn into an investment. Our mission is to support founders and inspire innovation. Thank you, Lon. Thank you, Alex. Follow Lons, Lons, on Twitter. Follow Alex. And unfortunately, I have one more character, 20%, 25% less efficient than my guys here. I'm at Jason.
How dare you? I blame your parents.
Disappointing.
Should have been named Bob.
All right, everybody. We will see you next time. Bye-bye.
Bye.